So based on my observation, and of course, that's what I really hope from everyone here is really more in-depth understanding of companies. I realize when we actually buy into stocks, we are still very dependent on the valuation, still very dependent on six tests. I think as an investor, especially long-term investor, we should really try to go ahead to understand companies better. So this is what I suggest for the next. Okay, yeah, maybe Mohan, maybe what I do is later I just pull out the previous ones, then we will see. We will see. Okay, sorry. Okay, since Mohan question quite interesting, why don't I just pull it out first? If we want, we can actually look at, I believe July we actually did the prediction. Let's see. Okay, maybe just look at the last year's one. Okay, let's look at last year's July. I think we did. Okay, so this is the last year's July slide. Okay, so you can see it's actually quite similar. Okay, let's see. 6 months. Okay, this is last year July. So we I actually again compile all the data. I'm not sure we did a poll, but oh yeah, we actually did a poll. Let's see if I have it consolidated here. I think we didn't do that. Okay, so we did this poll. GDP for US will continue decline. China GDP will continue its growth. Okay, unemployment rate. I think what we want is the index, right? Okay, so in fact we're quite accurate. So this was our poll in July. So we believe that as the stock market will actually downward all the way to September, reverse upward. So actually we're quite accurate. The STI prediction was 2005, 2007. Last year, the STI end at 2008. So yeah, we were actually quite accurate. Did we say who will win? Let's see. Nope, we actually didn't ask that question. Okay, so this was in last year. So of course, I also shared my opinion. Oh yeah, okay, not bad. Okay, this one a bit. Okay. Thank you so much, Mohan, for letting me show off. So I was actually quite correct. STI will rebound back to above 2007 by end of the year. So that was my prediction in July last year. Okay. Then after that, I don't think that that was in July, so I don't think that it will go below previous low, which is 2003. Okay. Then if you actually, let's look at also January. January. Okay, here. Oops, sorry. That was the one we actually did it in SGX. Okay, I think we did not do a prediction. Let's see. Okay, sorry, January we didn't do a prediction. Yeah, January we didn't do a prediction. Yeah, but the July one we actually did. So okay lah, not too bad, not too bad. Yep, so we will actually do it again we actually check back our results in July and see what happened. Okay, thank you so much. Thanks. Okay, so let me come back to here. So once again, I think will be great. We could all deepen, have more in-depth understanding of companies. So for the first half 2021, that means from Feb all the way to June, this is what I suggest for all our meetings. Okay, so we will actually have a pre-meeting. Okay, okay. I will actually filter out about 20 to 30 stocks based on what I will personally consider from my portfolio. Okay, so I will personally filter out 20 to 30 stocks. So this is based on what I will personally consider from a portfolio. So before the meeting, right, before the next month's meeting, sorry, Sihua, I think you need to off the mic. Okay. Okay, okay, sorry, okay. Okay, sorry, I had to mute all. Then after that, you all just remember to unmute when you actually talk. Okay, let me just go back. Okay, sorry for interruption. Okay, now, so I will filter up 20 to 30 stocks based on what I consider for my own portfolio. That's before the meeting. Then I'll actually send out a link for you all to vote for top 5. Okay, then once you have selected the top 5, right, I will actually engage a student analyst to actually present on the 5 companies. So he will actually do the business analysis, the 6 test, the valuation. Okay, then of course, we will also on our own go research on all these 5 companies. Then during the meeting, okay, we will have a business analysis discussion. So really focus on the business. Okay, so of course, after discussion, we will still go back to the portfolio game in our groups to choose any stocks. Then we will have a robo portfolio. Okay, that means very standard steps portfolio, and we'll see whether, hey, does the robo portfolio perform. So of course, the robo portfolio will be based on the 5 companies. So really, the whole idea here is, at least every session we'll have more in-depth understanding about the 5 companies. And more importantly, hopefully, throughout the next 6 months, you get a sense of, okay, what are the key things to look out for when we actually look at the businesses. So hopefully, through this repetitive exercise, number 1, we learn more about companies. Number 2, we sort of reinforce our business analysis capabilities. Okay. So this is what's going to happen for today. I'm actually going to show you the 20 stocks that is actually inside my watch list right now. Okay, then from here we will select the 5 stocks. We actually select the 5 stocks. Okay, then these are the 5 stocks once selected for the next month's gathering, which is going to be on February 22nd February. Okay, then my analysts will actually present at 5 companies, and we of course discuss together as a group. So hopefully that's okay. We will actually do this exercise for next 6 months to build our business analysis capabilities. Okay, now currently based on, so this is for my actual portfolio. So based on my current based on the current market condition, and let's say on the assumption I have not invested anything, on the assumption I have not invested anything, assuming I just have cash, don't invest anything. So this is how I would actually prioritize my search for stocks. Okay, this is how I would actually prioritize my search for stocks. Okay, so of course I will still look for undervalued blue chips. So some of the blue chip has not recovered, or either that have not recovered fully. Okay, I'll still look for undervalued blue chip. Okay, that's one. Okay, after that, my second tier is look for steady dividend yield. Okay, steady dividend yield. Okay, my third is the growth business. Third is growth business. And my fourth is cash position. So this is how I would actually prioritize at this moment. So personally, having invested, as you know, I am actually more a long-term investor. Okay. End of the day, blue chip is the one so far has proven to last the longest. So a lot of smaller company, yes, they can actually perform for a short while, but so far actually, unfortunately, if history is a guide, a lot of small companies, don't last very long. So for me as a long-term investors, I want to keep stocks. So it's better for me to keep blue chip. So in fact, this period is still a very good time for me to keep blue chip. Okay. So of course, the market is also, not say very clear growth. Okay, in terms of the real market. So of course, having steady dividend yield will be good. That's just my second point. Then I look at growth business, and the last one is strong cash position. Now, these are companies basically with the kind of money they have, they will not go bankrupt. I'll talk a bit more later. So I'll prioritize in this manner. So under the undervalued blue chip, so now the thing that I'm actually looking at is actually low PB. Low PB. Okay. So as you know, I think I've actually explained a lot of times when banks PB below 1, it actually get me very excited. And today, some of the banks are still PB below 1. So UOB, the PB, these are PB value. PB is 0.987. OCBC PB is 0.977. Okay. Hong Leong Finance, the PB is only 0.571. Okay. So these are for banks. So one bank's get PB below 1, I'm still excited. Okay. Then of course CapitaLand, to me below 0.7 will be exciting. So CapitaLand is still below 0.7, and Hong Kong Land, I still cannot understand how come Hong Kong Land can have such a low PB. So it's still going to be interesting to me. So these are the 5 counters in my watch list. Okay, on the assumption that today my portfolio is clean, I have nothing in my portfolio. Okay, so these are the reason why I chose them. Okay, steady dividend yield, of course, we are looking mostly at REITs. So to me, I only look for REITs that the dividend yield must be more than 6% and above, and I must like the property. So these are the 3 REITs that I said inside my watch list. Keppel Pacific Oak, US REITs, okay, currently give about 8.7% yield. Sersua REIT, 7.6%. Mapletree North Asia Trust, 6.1%. Okay. Then of course I have 2 companies. QAF. Anybody know what does QAF do or not? Anybody want to share what is one of the main products?
Gardenia bread.
Thank you so much, Gardenia bread. Thank you so much. So currently give about 5.4%. Of course, they are also into other food business. And thank you so much, Roti. And given that food is going to be paid a lot of attention by the government, I'm actually quite excited. So I'm quite sure they are likely to benefit from some grants one way or another, given that government actually wants to pay a lot of emphasis on being self-sustainable on food. CSE Global, okay. So this is a company that I can't remember offhand. They actually do what you call that. Okay. So valves, do valves. Okay, they do valves. Okay, they actually do valves. So okay, so apparently it's actually seems to quite stable. They're actually giving very stable dividends, and based on today's price, it's actually still 5.4%. So for a company that give above 5% dividend yield, I thought was actually quite interesting. Okay, so there are 5 companies. The 2 REITs is not blue chip. What do you mean? Okay, what do you mean not blue chip? So of course, my point here is this. This is how I select. So based on blue chip, of course is market cap more than, to me is more than 1 billion. So that's blue chip . And of course, I actually look for low PB. Okay, look for low PB. No, it doesn't have to be blue chip. So down here, I'm just looking for steady dividend yield. Okay, steady dividend yield. City development, if not because of the saga, I would consider . If not because of saga, I would actually consider. So again, like I said, I'm actually assuming that I'm assuming that now my portfolio is clean. I have nothing inside. So to be very frank, I actually own a CDL. I actually bought it before, and I'm not selling. I'm not selling. Okay, because it actually, based on valuation, it's actually very attractive. Okay, so that is what is actually happening in my real life for in terms of CDL. Okay. Next category, growth business. Growth business. I'm actually looking at China. I'm very positive about China growth story. I think China if you actually read the papers, China is the only country that have GDP growth the last year, and this year they are very bound for a very strong rebound. So this is actually an ETF, okay, MS China ETF. This is actually ETF, okay. So Riverstone is something very similar to what Top Glove do, but of course in smaller scale. It's a smaller company compared to Top Glove. I would actually have put Top Glove, but then of course, if you again remember that Top Glove was actually in the news for the wrong reasons. So instead of Top Glove, I actually chose Riverstone. Then ST Engineering, like I said, is actually basically into all new, what do you call that, the Smart Nations projects. Okay, so I think that one still a lot of rooms for potential for growth. So in fact, all the Smart Nation project, they're more or less involved inside. Okay, MedTech. MedTech is also into medical supplies. Okay, doing medical supplies. How I actually got this company, these two companies, MedTech and Powermatic Data. So what I did was this. I just go to stock screener. Okay, I actually use ROE, more than 15%. Okay, PE less than 20. Okay, I think that's how I actually got into. Yeah, I actually look at market cap. So that's how I actually find all these companies. Or at least I get ideas. So MedTech is actually here. Okay, I found MedTech here. Then Powermatic Data. I thought I saw it here also. Okay, so in that case, Powermatic Data was based on my own. I thought it was here. Okay, let me just confirm. Okay, so anyway, Powermatic Data is actually based on my own interaction. So it's actually one of the tech companies. Okay, it's actually one of the tech companies that have actually benefited from the recent tax rise. Powermatic Data. Okay, so you can see it's actually one of those that actually recovered the earliest and seems to have some uptrend pressure going. Yeah, so they are actually into IT products. Okay, dealing with IT products. So this is my choice for growth business. That means based on current situation, obviously medical is actually still good. Tech, I believe is actually still good. So of course China, I believe in China, and ST is they are always involved in all the latest project, and currently ST the price is actually still depressed compared to pre-COVID level. Okay, the last segment is strong cash position. I need to introduce you to this term called negative net debt. Negative net debt. Okay, let me just show you where I actually get this figure. Okay, if you look at any companies, look under valuation, there's actually this thing called net debt. Okay, you mouse over the information. Hopefully you can read. Let me just bring up mouse over information. So let me read out to you. Sum of all short-term debt, notes payable, long-term debt, and preferred equity minus the total cash and equivalent and short-term investment for the most recent interim period. That means, okay, this is what happened here. They actually use debt minus cash. Okay, if let's say you have more cash than debt, that means you would have negative figure. So I repeat, to actually calculate net debt, you actually take all the cash, all the debt that this company has, minus away the cash portion. And if let's say the figure is negative, what it means is you have more cash, okay, than the debt. So basically, this kind of company is very hard to bankrupt. Oh, that's what it means. That's what it means. So of course, again, if you think that economy is still not very stable, there is a chance that company may fall out. Also, these are the companies you know that, hey, even I don't make a single cent, I still won't bankrupt. Why? Because I can afford to pay off all my debt. So the 5 companies that I flag out potential M&A. Okay, maybe. So the 5 companies that I flag out based on this criteria is actually Yang Zijiang, Genting, HRNet Group, okay, Valuetronics, and TalkMed. Okay, so once again, what I did here is this: I have different investment teams, and from here, based on this team, I actually get stock ideas. I actually got stock ideas. So, like for example, you know, I have actually sort of explained to you how I do in your classes. So what I did here is this: usually over the month, I get stock ideas, get stock ideas, correct? Then what we do, we actually go and find the figures, then we actually compare. So these are the different ways I actually get stock ideas. Okay, doesn't mean that I will buy all this. Okay, but these are the different ways that I'll get stock ideas: undervalued blue chip, steady dividend yield, growth business, strong cash position. Then after that, we will actually collect more information. Then we compare side by side. Then after that, when it's time to buy, then we decide what to buy. Okay. Okay, there's some questions. Can we say negative net debt equal free cash flow? No. Okay, different from free cash flow concept. Okay. So in fact, if you want, net debt is just a stock value. So if you talk about cash flow is actually related to profit. Okay. Okay, any other questions? Let me just check and see is there any other questions. Okay, if no question, this is what's going to happen. So we're actually going to our second Kahoot exercise, whereby you choose 5 top favorite stocks. Your top 5 favorite stocks. So you can choose 5. You can only choose 5. Okay. Then after that, I'll flash the 20 stocks individually. If let's say it's one of the 5 you choose, you just like yes. If it's not, then you select no. So again, like I said, so this one will give all of us a sense of what are the hot stocks, what are the favorite stocks that people would like. So once again, okay, this is what I'm going to do. Okay, I'm actually going to show you the 20 stocks out, which you only choose 5. You cannot choose more. Choose 5. Then later in the Kahoot, I will flash the names individually. If it's one of those that I've chosen, say yes. If not, say no. Okay, so that we know what are the stocks that people are actually looking at. So obviously, if there are more people looking at the stocks, then there's a more chance for the price to keep going up. Okay. Okay, now, so this is what happened here. I have the 20 companies. Yes, the 5 PBs are based on today's closing price, correct? Okay. I have the 20 companies here. Okay. I am also going to open a breakout room. So if let's say if you want to do this alone, okay, fine. Okay, no problem. You can do alone. If let's say you feel like discussing with somebody, you can try to enter into the breakout room. Okay. Or either that get your kaki to enter into the same breakout room, then you can discuss from there. So we will probably take about maybe 20 minutes. Okay, maybe 15 minutes. 15 minutes. Take a look at this company. If you want to do yourself also can, want to discuss also can. After 15 minutes, okay, we will actually do a breakout room. The 20 stocks meet the 6 criteria. I didn't check. I'm not too sure. May not. Mostly should be. Mostly should be. Okay, but to be very frank, I did not check. Okay, mostly should be. Okay. So I'll just open the breakout room. Okay, of course, if you don't want to go in, also can. It's up to you. Okay, so I have opened all rooms. If you want, you can join. If not, you can do this exercise yourself as well. Okay, we will come back together in 15 minutes time. Top pick among the 20. Okay, the 5 I will actually choose, assuming that I actually don't have anything. You know, but you all choose banks, so what can I do? Yes, correct. It's winter, yeah, correct. Okay. So assuming I am actually not invested in anything, assuming what my 5 will be UOB, OCBC, CapitaLand. Then after that, I will go for Sesua REITs and XTMS China. Okay. So let's say, for example, this month I'm not investing in anything, and let's say there's five things I want to buy. I will buy UOB, OCBC, CapitaLand, XTMS China, and Sesua REIT. These are the 5. So I answer to Sok Yang's question. Wow, very bad leh. You have to key in. Then after that make money, you keep quiet, lose money, you can blame me, right? So bad. Okay, anyway, so these are my choice. Okay, so I think that we actually have completed the content part for today's session. Also, like I said, the admin part, there's a few things to cover. So please don't go yet. Please don't go yet. I definitely need your, again, we also need some consensus as well. Okay, thank you so much, Sokyang. We also need some consensus as well. So please don't go. Probably just give me another 15 minutes. So hopefully you actually like the whole, gathering exercises. So every once a month, we actually take about 1-2 hours to do a little bit of exercise, really to refresh some of the things we learn, okay, to apply in a real world scenario. Like I said, end of the day, I just look at very standard things, the markets, what stocks to look at, and over time you build up the portfolio. So hopefully, you all can just keep joining in this money exercise, just keep this, like a habit, like I always like to say, like going for a gym. Okay, then over time you actually build a very nice portfolio. Okay,